Good morning or happy midday, wherever you're tuning in from, and welcome to Saxo's Spotlight. My name is Jessica Amir, and here is Redmond Strategist team. And today we're guiding you through what to watch in markets for the week ahead. But first, we thought we'd round out where we are and how markets are faring before we touch on what you think, what we think you need to be focusing on this week. So, I guess where do we start? Well, there's a lot going on in markets. We're seeing US shares trade at their highest level in a month. So we've got the S&P 500, which is the biggest 500 stocks in the US. Just in Australia, our market is just shy of all-time high, and we do have commodity prices roaring extremely hot. We've got the copper price at $4.20 for the first time in 6 months on optimism, and iron ore prices also in bull markets. However, we do have China's NDRC accusing up lower, but all in all, I guess the market tone for 2023 is a little bit more optimistic than we had last year, and that is because we've consistently seen US consumer prices or inflation trickle down, and that is supporting a lower US dollar, and that is why the NASDAQ has closed up higher for the second straight week, and the volatility index, a measure of fear, the VIX index, is down at a year low. So I guess investors are expecting that Federal Reserve could actually pivot and potentially cut rates, believe it or not. So the market is expecting interest rates to be somehow cut in July, which is very different to Saxo's thinking. But let's broaden out the conversation and open up to Redmond now. Redmond, what are you watching? I guess China is really driving markets. We are seeing the China consumer and tech basket lead Saxo's baskets higher. But I guess what are you watching this week, or maybe take us through what's pivotal?
Yeah, I think China has been the big story over the last few weeks, and actually since November. And Hang Seng did very well. It's up almost 10% for so far this year already. And China CSI 300 is up about over 5% already this year. And a lot of actually is a very large flow into Asia from overseas and through the stock connect. And if the pace continue, more like almost $1 billion a day, and that is after 1 or 2 more weeks. And so far this year's buying is pretty much already is like similar to last year's inflow already. So yeah, it's huge buying and into Asia. And I think, it's the COVID reopening from that COVID containment, and that of course is one of the major macro events. I think not only in China have a lot of impact on a lot of asset classes as well outside China. And there's also the change in attitude towards more friendly or supportive to the real estate, especially down to the developer level, and also helping the so-called quality developers to show up their balance sheet and let them be able to get access to finance again. That is, of course, quite a positive development for the economy and also for the stock market. And also the platform company. The tone has been more friendly since the World Conference a while ago. And last week, actually Friday again, there's a report that's saying that the Chinese government has taken some golden share, and the official term is special management shares in the local units of Alibaba and Tencent. And I think the investor overall in general welcome that, even though that means that the government may have actually exert more control in those companies. How those golden share work. Usually it's about 1% stake, equity stake, but they give more voting power and giving board seats and also giving more control and influence over the business decision of those important key operating unit of the platform company, starting with I think Alibaba and Tencent, and previously Didi, and but probably will be more to come. And so, but I mean, despite this tightening, a little more control and influence on those company, investor overall welcome that, because that add to the predictability and certainty. To, instead of over the last 2 years, there's a lot of uncertainty about the policy, and now is and now the government has signaled that pretty much the ratification of the regulation has and the operation of this platform company have close to an end, and they are now more will be exerting the influence through the boardroom and also through some already well stipulated regulation rather than discretionary policy. So overall, market like it, and so that is the three key things: development in China, and helping improve the sentiment quite a bit, and the fourth thing, actually, China has also become more conciliatory in terms of geopolitics and diplomacy, and actually have softened the tune. Like now they are importing coal again from Australia, and also have softened some of the rhetorics towards the America. And so so overall, in Saxo, we think that is the Chinese equities, Hong Kong's equity probably will do well in the coming month, and also global equities, and also will be more sideways or a little bit upside, and because it's, the Fed, the inflation has come down a bit, and at least in the near term, the first round of decline in inflation will keep the Fed on a downshift mode, and we are not expecting, as Jessica correctly mentioned, we are not expecting any rate cut within this year, but we think that after another 25 basis point rate hike, the Fed can take a pause. And having said that, we are expecting inflation to pick up again in the second half. But the stock market, meanwhile, will do well, and not only China, but probably in the US will also do a bit better. That will also put some pressure, of course, on the dollar with interest rate. Maybe the Fed may be taking a pause. And the last thing I want to talk about is, because this week, I think one of the key events will be the BOJ meeting on Tuesday and Wednesday. The decision will come on Wednesday, and there's quite a bit of speculation on policy adjustment since last week. Since in the Japanese local media, there's there's a story about that, and so you can see JGB being sold, and JGB yield gone up, and the yen become very strong, touch 127. And but we are not expecting any policy adjustment yet, but probably they might they might revise the CPI forecast on the outlook, and then, but after the BOJ meeting, I think the market attention will be turning to who will be the next governor. So so those are the key wheel we have at Saxo, and also the key event I think we are watching this week, and pass it back to you, Jessica.
Thanks, Redmond. Just echoing the view that we have as a house, just further to what you mentioned about China's reopening. So we are quite optimistic, I guess I should say, on the China reopening theme, and investors can get exposure to China some of the ways that Redmond has mentioned. But a great way to get inspiration is to head to Saxo's baskets. So we've grouped the largest stocks in Asia and put them in a basket, and that can be seen under our inspiration tab, and click on stocks, and then you'll see all of our baskets there. And as we were saying at the top of the call, we're seeing China's consumer and technology basket outperform, and it started doing that since December, since China started easing restrictions. However, there are other ways that you can access this theme of China really scaling up and focusing on ramping up GDP. So we mentioned several weeks ago that China has started buying Australian coal for the first time in 2 years. This is after the country had a ban on Australian coal. So this has really put the focus on a lot of Australian coal companies, but not just coal, also moving more broadly and stepping back now to looking at resources as a broader theme. The resources sector is likely to see one of the most earnings per share upticks in 2023. And if you just look at Australia alone, earnings per share is expected to go up in the mining sector by 70%. And we think that this could be achieved at Saxo. And I will say that this is the most earnings per share that is expected across the entire market if you compare that to the S&P Dow Jones indices, and if you also compare that to the Nasdaq 100, the biggest tech stock. So the Aussie share market's mining sector might indeed do well as well, because the copper price is up 30% from its low. It's in a bull market. The aluminium price is up 30% from its low, and the iron ore price is also up 60% from its low. We are seeing the iron ore price correct, and that could indeed mean that Australia's income could have a little bit of a correction as well, just on the back of commodity prices pulling back, and that it could also cause for investors a little bit of a downshift in some of those key commodity companies like Rio Tinto and BHP that are trading in record high territory. But more broadly, we do think longer term, big picture, we should see commodity prices higher across 2023. Specifically, we're thinking that copper could head higher, as well as aluminum as well. And last but not least, gold. Globally, we are seeing gold stocks gain a lot of momentum in 2023, and some gold stocks are up in the order of 25% this year. So as a house, we think investors should be keeping an eye on the China basket and the stocks in that. So that's a China consumer technology, and also commodities broadly, but we do also have an Australian resources basket that you can also look at. And last but not least, we also, I guess, encourage investors to also think about getting currency exposure. So on the back of China's reopening, Australian GDP is likely to go up by at least 1% on the back of commodity buying picking up. And so you might like to think about possible upside in the AUDUSD. So we are seeing the Aussie dollar trade just shy of almost 70 cents, which is a key pivotal level. If we do get stronger Australian economic numbers in terms of employment numbers on Thursday, then we could potentially see the Aussie dollar supported to the upside. So that's also one of the key things that we are watching this week. And rounding it out as well, if we do step back and have a look where we are, even though we're fairly into the new year, stepping back this year, we're also seeing that China is leading the way in terms of global share price growth. So China's, or I should say Hong Kong's Hang Seng, is up in the order of 7%. And then you're seeing China's CSI 300 up by 6%, and the Aussie share market is up by 5%. Remembering Australia's biggest companies are in resources, and the second biggest component of the Aussie share market is from banks, and they're likely to upgrade their earnings, or that's Saxo's expectations, when they report their earnings results next month. So there's lots to consider. I will go back to you, Redmond. Do you have anything else that you're watching this week that we haven't covered, or anything you think investors should be watching?
I think it's we have pretty much covered quite a bit, and I think the next this week is in the US. We don't have any really first tier economic number. I think it will be a retail sales, industrial production. Maybe I think it's industrial retail sales, maybe the one to watch. And also we have Procter and Gamble reporting results, and also Netflix. So that will actually give us some little insight into how the consumers are doing. So far, according, if you heard from what the bank CEO said, said last week, and you can see U.S. consumer spending still quite strong, and the credit card spending also quite strong. So, and that's back to one more point I just want to reiterate. Back in Saxo, we are more positive towards the U.S. economy, and we are one of those houses that are not calling for a recession in the U.S. in 2023. So, and that also add to the our notion about that is the stock market probably will be doing a bit better, and with the Fed pausing and the economy underlying is not running into recession. And of course, one of the risks is always the margin compression. Margin may be a little bit under pressure in the U.S. company, but maybe that has been quite much discounted already in the price. So, but we need to watch it very closely.
Wonderful. And just rounding it out in terms of other earnings and things to watch, ladies and gentlemen, we do have some other big banks reporting this week. So Morgan Stanley and Goldman Sachs are also reporting. And as Redmond said, Netflix is on Friday. But let's always remember the big picture as well for those long-term investors who are tuning in. We do think you have to also consider the consensus expectation for overall weeks, and consensus is only expecting the Nasdaq 100 companies to report EPS growth of about 13%, but still that would be a recovery from last year. If you think about the S&P 500 collectively, the biggest 500 stocks in the US, the market is also thinking that we could potentially see 25% earnings growth for the biggest S&P 500 companies. As we also said, the market thinks that the Fed will downshift in rates and will start dropping rates or cutting rates. Again, that's not what we think. But the reason that I'm saying this is because the market is thinking that we'll see the most upside in earnings in those stocks that are interest rate sensitive. So the market is looking down double-digit earnings growth in real estate and information technology stocks in the US in terms of earnings per share. But remember, the market consensus, and since this is something that we are more in line of, the market consensus is that the most earnings growth will likely come from commodity companies that could report earnings growth of in excess of over 70%. So that's something that seems potentially a bit more realistic, particularly with some commodity prices up 60%, 30% and 50%. But I think, ladies and gentlemen, we'll leave it there. Thank you so much, very, very much, on behalf of Redmond Wong, who is our key expert in Asia. Thank you so much. And myself, Jessica Amir, from the Australian desk, and we also have Chiru Chanana also on our Singapore desk. We are the Saxo Strats in the Asia Pacific, and we're joined by a very esteemed team across the Asia Pacific, including our sales traders, RMs, and digital online sales, who are here to support you. So please reach out for any questions, feedback, or comments. Stay safe, happy trading and investing. I'll see you next week.